Hello guys, welcome back to our channel. So today we are going to talk about how does the stock market work and what is it. The stock market is where investors connect to buy and sell investments, most commonly stocks, which are shared ownership in a public company. Definition: what is stock market? The term stock market often refers to one of the major stock market indexes such as the Dow Jones Industrial Average or the Standards and Poor's 5000. When I purchase a public company stocks, you're purchasing a small piece of that company because it's hard to track every single company. The Dow and S&P indexes include a section of the stock market and their performance is viewed representative of entire market. If you will usually buy stocks online through the stock market, which anyone can access with a brokerage account, robo-advisor, or employee and treatment plan. You don't have to officially become an investor to invest the stock market. For the most part, it's open to anyone. The stock market is regulated by the USA Securities and Exchange Commission and seeks missions to protect investors, maintain fair, orderly, and efficient markets, and facilitate capital formation. You may see a news headline that says the stock market has moved lower or that stock market closed up or down for the days. Most often this means stock market indexes have moved up or down, meaning the stock within the indexes have either gained or lost value as a whole. In investors who buy and sell stocks hope to turn a profit through that movement in stock prices. How does the stock market work? The concept behind how the stock market work is pretty simple. The stock market lets buyers and sell negotiation price and make traders. The stock market works through a network exchange. You may have heard of New York Stock Exchange or the Nasdaq. Companies list shares list stock on exchange through a process called initial public offering. Investors purchase your shares among themselves, and the exchange tracks the supply and the demand of each listed stocks. The supply demand help determine the price of each security or the levels at the stock market participants. Investors and traders are willing to buy or sell. Buyers offer a bid or the higher amount they will pay, which is usually lower than the amount sell ask. For the exchange, this difference is called the bid-ask spread. For the trade to occur, a buyer needs to increase the prices or the seller needs to decrease hers. This may sound complicated, but computer algorithms generally do most of prices getting calculations when buying stock. You will see the bid-ask and bid-ask spread to your broker's website, but in many cases the difference will be pennies and won't be of much concern for beginner and long-term investors. Historically, stock trades likely took place in a physical marketplace. These days, the stock market works electronically through the internet and online stockbrokers. Each trade happens on a stock-by-stock basis, but overall stock prices often move in tandem because of the new political events, economic reports, and other factors. What is stock market doing today? Investors often track the stock market performance by looking at a broad market index like S&P 500 or DGAA. The chart below shows the current performance of the stock market as measured by the ACP 500's closing price on the most recent trading day, as well as the S&P and 5000 historical performance since 1990. Um, Stock market data may be delayed by up to 20 minutes and is intended solely for information purposes, not for trading purposes. So, what is stock market volatility? Investing in a stock market does come with risk, but with the right investment strategies, it can be done safely with the minimal risk of long-term losses. Day trading, which requires rapidly buying and selling stocks based on the bright swings, it's extremely risky. Conversely, investing in the stock markets for the long term has proved to be an excellent way to build wealth over time. For example, S&P 500 has a historical average. Uh, Analyzed total return about 10% before the adjusting for inflation. However, rarely will the market provide the return on year-to-year basis. Some years stock market could end down significantly, other up. Uh, tremendously. These large swings are due to market volatility or periods when stock prices rise and fall unexpectedly. If you are actively buying and selling stocks, there's good chance you will get it wrong at some point, buying or selling at the wrong time resulting in a loss. The key to invest safely is to stay invested through the ups and downs in low-cost index funds that track the bull market, so that your return might mirror the historical average. How to invest in stock market? If you have 400k through your workplace, you may already be invested in stock market. Mutual funds, which are often composed of stock for many different companies, are common in 400s. You can purchase individual stocks through a brokerage account and be invested in stock market. Um, Both accounts can be opened at an online broker through which can you buy and sell investments. The broker acts as a middleman between you and stock exchanges. Um, Online brokerage have made the thing up process simple. At once you found the account, you can take your time selecting the right investments for you. With any investments there are risks, but stocks carry more risk and more potential for reward than some other securities, while the market history of gains suggested that a diversified stock portfolio will increase in value over time. Stocks also experience sudden dips. To build a diverse portfolio with purchasing many individual stocks, you can invest in a type of mutual fund called an index fund or an exchange traded fund. This fund aims to passively mirror the performance of index by holding all of the stocks or investing in the index. For example, you can invest in both DGA and SAP 500 as well as other market indexes. Through index funds and ETFs, stocks and stock mutual funds are ideal for long time horizon like retirement, but unsuitable for short term investment, generally defined as money you need to expend within 5 years. With a short term investment and a hard deadline, there's a great chance you'll need that money back before the market has been time to recover losses. Um, Also, stock market data may be delayed up to 20 minutes, and it is indeed solely for informational purposes, not for trading purposes. So, I think it's enough for today. Thank you guys for your attention. Um, Goodbye.